video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello and welcome to Camel Finance. I'm your boy Camel and it's bank holiday here, but we don't take no days off. So welcome to the week, welcome to Monday. Today I've got a bunch of things I want to point at. Some of it is what's coming up this week, because for a long time I've been repeating myself and saying let's wait for the FOMC week, there should be some setups, some high probability dips to buy and that kind of thing, and finally we're here. So I'm going to just kind of show you that. I'm looking forward to being able to actually put some trades on and get behind some setups. As always, I've got a little bit of Bitcoin and crypto news, some of it funny, some of it not so funny. I've got a really cool Coinbase advert I want to show you. And at the end, we're going to talk about the banana zone. And then in this middle section, I want to show you that the stock market is really unclear. There's some weird things going on, and I'll show you that as well. And then as always, we'll take a quick look at one or two charts before we get out of here. So in the meantime, hit that like button, make sure you're subscribed, and let's get into this. As we know, especially if you've been here for a while, this week should be pretty stacked. We have got a whole heap of earnings coming out Monday, Tuesday, pretty much every day. On Wednesday, we've got Jay Powell speaking. We've also got FOMC, the interest rate decision, and the economic calendar is looking pretty stacked as well. Okay, we got ISM and PMI, like I said, FOMC, jobless claims. So there should be lots and lots of volatility, and of course there should be some cycle lows or some half cycle lows depending on how you want to count it. For the Bitcoin news, I want to kick things off by showing you this commercial from Coinbase, which I actually thought is their best one to date. So check this one out.
If a Bitcoin was the size of a quarter, all 21 million of them would fit inside a single shipping container. But to fit the dollars the Fed prints on average every day, you'd need 72 shipping containers. Each year, you'd need 26,280 containers. And to fit what they've printed in the last decade, well, you'd need a lot more than that.
How cool was that one? That one's my favorite one so far from them. Here in the UK, however, we are continuing to do UK things pertaining to crypto, okay? The UK is apparently going to ban retail investors from borrowing money to buy crypto, and this includes buying crypto with credit cards, which, to be completely honest, although this is being touted as new news, I think this has been the case for a while, as far as I'm aware, at least with some of the main exchanges. So again, the UK here embracing crypto, right? Becoming a hub of crypto. And as we're approaching some cycle lows, we seem to have a narrative. We just had the Arizona governor veto the state strategic Bitcoin reserve legislation after it was passed at the House and Senate. She called Bitcoin an untested investment. So does this give us the narrative to explain away some downside, a half cycle low or a cycle low depending on the count, and then they probably do a 180 just like they did with the ETF, and then of course we see the price do what the cycles were pointing for it to do the entire time. Over in the stock market, this is where for me the weirdness is starting to show. Okay, we've got institutional investors, rarely been this bearish on stocks, and hedge funds shorting US listed ETFs at a record rate as of April, which even surpassed the levels seen during the 2020 market crash. And at the same time, retail investors have bought the most equities in history. We've had retail buying the dip hard the entire time, whilst the smart money, allegedly the smart money, the institutions, have been selling and shorting. So is that a good sign? I don't think so. And also notice, this is the complete polar opposite to what we've been seeing in the crypto market space, right? We've got 2 trillion BNY Mellon buying $68 billion worth of MicroStrategy shares in Q1 of 2025. So under the hood, the banks are buying Bitcoin and they're using MSTR as their proxy. But at the same time, these institutions are apparently selling into retail, which is quite an unusual setup here. And of course, all of this begs the question, doesn't it? Are we going to get a V-shaped recovery in the stock market, just like we've all been kind of trained and conditioned to expect and see following the C19 era? Are we just going to be continuing this pace and therefore putting us right back at all-time highs by May the 22nd? Or is history repeating, and are we setting up here for a lower high and a rollover just like we saw during the GFC? Are we going to get something like this, which of course resolves to a lower high below this high, and then we roll over and the real fun and pain begins? I've also been seeing a lot of this. I just want to pause here for one moment. because I can see a lot of people saying Buffett is all in cash and Buffett's got record cash piles, and it is true, right? He's got a lot of cash relative to the prior years gone by. But relative to total assets under management, it's really a negligible position. It's not like he's gone 85, 90% into cash and he's hardly holding any stocks or anything like that. He's just got a lot of cash because he's made a lot of money. And relatively speaking, it's all kind of gone up in parallel. So yes, the dollar value of his cash he's holding is extremely high relative to years gone by. But as a percent portfolio allocation, to say he is all in cash is simply disingenuous. Of note as well, he had record cash last year and the year before. And of course, the markets did nothing but rip the entire time. So if you're one of these people that's thinking this is a signal and Buffett in cash and blah, 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 just ignore it, in my humble opinion. At least that's what I'm doing. So getting back on track, we know that we've got some interesting Bitcoin news. We know that we've got a stock market that may or may not be shaping up to do the unthinkable. And at the same time, we know that we've got this weird divide with retail and institutions and the way they're positioning their capital, and all of that is occurring against a backdrop of institutions actually buying Bitcoin and using proxies, whales still accumulating in the Bitcoin market space, and notice the complete dichotomy here because retail has quit on Bitcoin. They've totally given up. They've totally left. They don't care anymore. They're all out here calling tops and buying the dip in the stock market. Absolutely wild way to start this week off. I'm going to be super interested to see how this week plays and what happens out of FOMC once the dust and volatility is settled as always. Big shout out to Geometric here because once you draw this Gann box with the right scaling and ratios, the 45-degree angle emerges and it's not just a line but a resonant path throughout the chart. If we exclude the extremes, the extreme blow off top euphoria bits, the lows are here holding inside of this Gann channel and tells us that the maximum kind of downside really would be about 72k. And remember, there's a lot of people waiting in that neighborhood to step in and buy. And the more we walk forward in time, the higher that 72k number becomes, the less likely it is you are to get it, in my opinion. And for all the people that say we couldn't possibly go to 150k, well, I actually think overshooting this would not be that insane, at least based on historical price data, and an overshoot up there would be some insano berserko numbers. So again, I'm here to say never say never, open to all possible outcomes, and that means not just being open to the bearish scenario, but it also means being open to the extreme bullish scenario as well. And of course, if we're going to see some extreme bullish scenarios, then it might look a little bit like the banana zone that Raoul Paul and his team have been touting the entire time. So we know that we've got this global M2 with a 12-week lead, and people are modifying the leads, and if it plays out, okay, then we're going to be at 150k Bitcoin in absolutely no time. We also know that global M2 is breaking out, retesting, and about to resume to the upside here. Again, probably dragging the likes of Bitcoin risk in general much, much, much higher. And as well, this total liquidity can explain 90% of Bitcoin's price action and 97% of the Nasdaq's moves, which is pretty wild. Bitcoin is still very comfortably within this trend and right around the median line, and thus we may well just be a few weeks, if not a couple of months away from seeing the most bananas part of the banana zone if this whole thing is to repeat and Rao is to be proven correct in his don't F this up thesis. A lot of people calling for a bunch of things as well, like these altcoins to start to break out. And as I've been saying over and over again, whilst I don't think there's going to be a broad-based alt season, if there was a time to see these things go, I think it would be mid to late this year. These models do all suggest that 250k to 450k is plausible, and therefore if that kind of performance is on the table, if this whole banana zone thing really is possible, there could be scope for 20x in some of these altcoin markets. Which ones? Who knows? I certainly don't. Certainly not something that really interests me, to be completely honest with you, but my focus is going to remain on hopefully getting confirmation of this latter part here, and of course selling into it once we approach the top. In the meantime, as expected, we are starting to get some rejection from some of these crypto-related equities, and of course Bitcoin on its way lower in the short to medium term into that FOMC timeframe, as we have known for a long time. As I said right at the start of today's episode, I'm really grateful that we're about to get to back some trades. We're about to get to talk about something other than patiently waiting for the FOMC timeframe. Also notice gold here getting a pop. Is that a daily cycle low? Would be slightly early, but not completely out of the ordinary. And notice the decline, hardly anything as well. Sets us up here for some short-term trades, I would think, this week. For silver, it's still following my yellow squiggle, so happy days there. Needless to say, the stock market hasn't changed since the weekend's deep dive video. And so as and when we have some more updates, as and when we have something to say, and as and when trades to back, I will, of course, update you in real time. Until tomorrow, have a fantastic day off if you've got a day off, and all the best. Cheers. Bye.
Camel finance, he's the man to see, rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame, sticking to his guns in his money game. He's a badass, oh yes indeed. Camel